Hello and welcome back to another video. Today, I'm going to be talking about the 3 different types of investors and the traps of not knowing which one you are. Alright, so if you're new to this channel, do me a big favor and hit that subscribe button. Alright, so let's begin. So in the past, I used to attend investing schools, like went for courses online. I even paid like $1,000 for a boot camp to learn how to invest properly. And one of my famous investing teacher, so he's a famous investor in Singapore, he teaches value investing, and he told me there are 3 types of successful investors in this world. And I thought, hey, you know what, that makes a great video title, so why not share it with you guys. So the first type of investors are those that follow a strict methodology. Basically, you find a method that works and you stick with it. You don't change, you don't deviate. In fact, this describes most value investing schools. I'm not sure about trading schools. Maybe you have to change your techniques depending on the market, but I do know for value investing schools, they pretty much follow a strict methodology. You have a valuation method, you stick with it, you don't deviate, and that's about it. In fact, I would even consider most passive investors, those that put like a monthly fixed amount of money to like an index fund, same thing, first type of investors. So famous investors that follow a strict methodology would be like Walter Slosh. So basically, he is a good friend of Warren Buffett, worked together with him when he was younger. He basically used Ben Graham's technique, and he didn't change throughout the years, basically applying the same techniques throughout decades. And he has worked very, very well for him and his investors. So the second type of investors that do very well are those that are talented, like they are super smart and sharp, and they can see patterns and logic very quickly. They are also extremely passionate and very hardworking. Like, you can't live without either of these 3. So people that are in this category have the ability to develop, they have the ability to build on current principles and apply them in unique, different situations. So examples of people that are in this category would be people like Ben Graham. He was very different from other investing gurus at his point of time. Warren Buffett, his #1 disciple, kind of learned his principles and developed and changed it over the years. Ray Dalio, extremely smart man, able to see big picture trends and explain them in such simple words. You can watch his video on how he thinks with his team, incredible. And of course, last but not least, Warren Buffett's partner, Charlie Munger, really amazing, talented and hardworking investor. He's basically a walking Wikipedia basically. So the third type of investor that does very, very well, interestingly, is the friend of the first 2 type of investors. Why? Hey bro, give some tips. And then the friend would tell you, you know what, you should buy Berkshire Hathaway when it was like $20. And then you bought it, and then now you'll be like, worth $200,000+ a share. That being said, the real problem is when you don't know which one you are, and then you try to invest or strategize your investing strategy like you are that type of investor. So let me give you 2 specific examples. #1, they think that they're the Warren Buffett of investing. Just in case, for those of you that don't know, Warren Buffett is the world's richest investor. So they think, or some people think, they are as capable as the world's richest investor in terms of, the way they think and the way they invest. And the problem is that it's so hard to tell. Like, you would think, maybe, I have some sort of talent, I can do it. So let me give you a simple example. Like, if you are in the neighborhood, right, and you always go to this indoor basketball court that's downstairs your house, and then you play, and then you dominate everyone, you get an impression like, hey, I'm pretty darn good. Maybe I should just challenge LeBron James and Michael Jordan and whoop their ass. I might have a chance, But the reality is, unlike basketball, it's a lot harder to tell. And the risk is not just loss, there's just a bad defeat, but you lose money, like actual money. So it could be years of hard work that you can just lose them because you invest thinking and acting as though you're Warren Buffett. And the second very, very big trap is thinking that your friend is the next Warren Buffett. Same analogy. Imagine you're in the basketball court, the neighborhood basketball court, and your friend is like the king of the basketball court, and you're like, dang, this guy has talent. I'm going to bet on him. He's going to win the state championship, the world championship. He's going to be the best player alive, man. Yeah. So when that happens, you follow his advice, you're going to get into a lot of trouble. In fact, when you one simple trap or one specific example of this happening is when, you know, there's this basic or common investing term where they tell you to be greedy when others are fearful, be fearful when others are greedy. So when the stock goes down, it's losing a lot of money, he tells you, you know what, bro, use that time to be greedy, double down, invest more, and that's when you lose a hell lot more money than you would ever expect to lose. Why? And how do I know this? Let's just say I thought that I was like a Warren Buffett. Maybe I have some talent there, and that's why, because of that, I can share with you guys, this is two very, very big traps. Don't fall into them. In fact, in the 2016 crisis, you know, the oil crisis, I made a huge bet. I felt that, you know what, oil will definitely rise because there's no way it would stay at $30 a barrel. Sure enough, it did rise. I made like $30,000 in that short like half a year or so. I thought, like, you know, I'm the king of investing. I'm the Warren Buffett. I beat the 20% annual returns, man. Hell yeah. In fact, I had like a capital of maybe 40,000, but I got like a 30,000 return. That's like an 80% return in half a year of starting investing. I'm king, you know. That's how I felt. But guess what? Within the next half a year or so, I lost $50,000. Why? Because, again, I thought I was good. I asked my friends and they told me, double down, bro. No way oil is going to stay down. And they were dead wrong. And so was I. So I hope this lesson is helpful. I don't want you guys to make the same mistake I did. And if you haven't already, be sure to subscribe to my channel, and I'll see you again next time. Ciao! So do you agree or disagree with my, you know, classification or my mentor's classification? Alright, let me know what you think down in the comment section below, and if you haven't already, please subscribe to my channel. I need all the support I can get, and in the meantime, stay safe. Ciao!